Right, let's take the discussion forward with Vivek Karve, CFO Mahindra Finance, who's joining us now. There's a lot happening on the NBFC space. The October growth was quite robust. But before I come to that, Vivek, let me begin with a narrative in the market as it just emerged in the last 48 hours. Ever since the chances of a rate cut in US have shot up, and several global agencies are now calling for a 250 to 275 basis point cut in US. There is a view that India may not be very far behind. If May, June is where US rate cuts may start, we may also see cuts beginning with a lag of, say, a quarter. In a rate cut regime, broadly, if it starts in the mid of next year here in India as well, give or take a quarter, it may start becoming very beneficial for NBFC as a universe. Can you explain for our viewers how will it impact the rate cut regime? Everybody is revisiting that point that rate cut regime is good for NBFC, that period. Rate hike regime is good for banks. So, would you agree with that?
So, first of all, good afternoon to all my viewers, and thank you for having me on the call today. So, what the market has understood is right. Typically, if you look at all the NBFCs will lend on a fixed rate basis, which would then mean that if the rates were to go down, then the NBFCs whose book has been built on a fixed rate basis, there is an opportunity for the NBFCs to expand their net interest margins. So this is what typically happens in an NBFC world.
Great. And also, I was speaking to, one of the big group heads recently. They have very large exposure via a different category of product, consumer, Dabur, and they was telling me that there are very clear signs of improvement on the rural side. You have a very large exposure via a completely different product, but the target market is the same, right? Would you concur that after being soft for a very long time, there are early shoots of recovery in the rural India?
In fact, I have a slightly different point of view here. So if you look at the last 4 quarters or so, where the FMCG companies have been complaining about a very subdued demand environment in the rural India, that is not something that vehicle financiers like us have been witnessing. I'll explain why I say that. If you look at somebody who wants to buy a vehicle, he would typically put it to productive use. And if he sees that opportunity to earn income by deploying that vehicle, then only he will invest. So generally, if you look at the way the economy has been growing, look at the infrastructure spends by the government, look at the spend that government is doing on rural development, or for that matter, the GST revenue that the government has been earning, it in a way points out to an overall buoyancy on the rural infrastructure as well as the general infrastructure spends, both by the private sector as well as the public sector. And that is the reason that while the FMCG companies have been experiencing a subdued demand environment, we as NBFC world have actually been growing quite consistently. And MMFSL is not an exception. It is generally speaking, all NBFCs have reported very robust disbursement growth and therefore the asset under management growth as well. So if the tide is turning and the rural incomes are showing a definite upturn, it continues to augur well for even the NBFC sector.
So this is Vinny joining in the conversation as well, right? You're talking about that rural, not being much of an impact for y'all. But, there was this trend that came up was that tractor sales were impacted in Q2 specifically. And the high-yielding use segment also, which was a bit muted in Q2. So anything in terms of the improvement that you're seeing on that front now in Q3? Has this situation actually started showing a positive side and a green shoot?
So you're right. In some of the states which experienced some erratic rainfall, the southwest rainfall, those states the demand was a little muted, and in those states probably the collection performance was also not as good as in the other states. But as the Karif crop comes in, MSP has anyway been raised by the government. we believe both the demand as well as the collection efficiency in these states will improve. Also, the northeast monsoon is yet to show its full color, and IMD has kind of projected that to be in a range between 88% to 112%, and they are pointing more towards a normal northeast rainfall, which would be positive for the Rabi crops as well.
Sir, also in terms of growth, right? 27% growth has continued in October as well. So would you want to relook at that 20% growth guidance? Should we expect a higher guidance now?
So growth for the sake of growth is not something that we are targeting. So we would like to have a growth which also brings with it a very good asset quality. So while we had given the guidance at the beginning of FY 22-23 that we would be doubling our book by the end of FY 25, and we believe that we are on track to do that, we are not in a hurry to do so. If growth happens, combined with a supremely good asset quality, we'll be happy.
Supremely good asset quality. That was my next question. And I'm going to put in a couple of questions together. So asset quality, do you see that holding up now? And in terms of NIMs also, do you think the NIMs have bottomed out?
Let me take the second question first, whether the NIMs have kind of bottomed out. I would say my answer would be yes. And if I were to also take a cue from the first question that was asked to me, if the rate cycle were to show signs of reversal, NIMs could improve. On your first question on the asset quality, if you take a slightly longer term horizon, say the last 4 to 6 quarters, we have been improving our asset quality both on stage 2 as well as stage 3 quite consistently. The collection efficiencies have also been improving quite consistently. So we are at a stage today where the stage 2 is very firmly at 4.3%. And stage 2 is in and around 6%. And we believe there could be some headroom available for us to further improve on the stage 3 number, as a result of which we have actually given a guidance that our credit cost for the full year will be in the range of 1.5 to 1.7%.
Thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of the company's growth outlook going forward as well. That was the management of Mahindra Finance, Vivek Karve, CFO at the company, joining in with us. Let's